Hi friends, welcome to Adda 24/7. We are in the Achiever series for RBWM. Here we are covering all the important theory, numericals, objective questions, case studies. So watch the series till the end. Also, watch all the lectures of the series. Daily, same time, same channel you will be having it. Okay, Officers Adda 24/7. Okay, so let's start. First one. The maximum repayment that a bank generally allows in home improvement loans or home decor loans is. So what is the tenor of this? Tenure of this here. Always remember, what is home improvement loan? See here, first always home loan is given. We first need a house, right? Home loan is given first. After the home loan is given, then second part is this home improvement loan or HI, or I'll call this HD, right? Anything. Home improvement, home decor. So first is always home loan. Then you have HI or HD loan, right? So what is the maximum tenure for this year? Okay, now you answer me everyone. What is the maximum tenure for your home loans? Maximum tenure for your home loans. What is the maximum tenure for your home loans? Home loans is around maximum. I'll give you roughly it is 25 years. Max to max. Huh? Generally, it is in the range of 15 to 20 years. All the banks give it in the range of 15 to 20. But in exceptional cases, banks do give in for 25 years also. But this HI or HD loan, that is not a priority sector loan. It is purely a commercial loan. Commercial. Okay. This home loan can be called as a priority sector loan also. It means banks can give under that category. So what about this HISD? What is the maximum tenure of this home loans? It is, yes, it is 10 years, correct? Home improvement loans are for 10 years. Got it? Move on. Everyone clear? Next one. The private banks adopt a model involving dash in case of auto loans and vehicle loans. Manufacturers only. Manufacturers and financiers means bank only. Manufacturers, dealers, financiers. And last one is dealer and financier bank only. So what do these private banks adopt? Now this is from your textbook. Many of you are not in private banks, so you won't be knowing this. Even though many of them are in the private banks, but you generally don't deal in this auto loans, right? So many of you might not be knowing, even though in the private banks. See here, logically tell me, forget this private bank. Suppose if you give a auto loan or vehicle loan, you tell me, what all will be the points of considerations of yours? Will you consider the manufacturer, means this car manufacturer, whether it's Maruti, means what do you mean by this? Consider. It means that at the bank level, see here, at a HO level, top level, you will have a tie-up with the manufacturer. So that can be done, right? So that's why I said, forget the term private bank over here. It can be nationalized bank also. It can be NBFC also, isn't it? HO can have a tie-up with the manufacturer. Then branch. Suppose if there is a tie-up of HO with manufacturer, then okay, then no problem. Everything will be done then. Branch can have a tie-up with a dealer also then. Dealer means who's the distributor over there. So both the elements can be considered. So that's why what will be the answer over here? The answer will be C. Manufacturer, dealer and financiers. Right? Financier means us, we who are dealing in that loan. Right? The loan for two-wheelers are mainly financed by. Oh, this is something different now. The loan for two-wheelers are mainly financed by private banks, foreign banks, public sector banks and NBFCs. Who does finance two-wheeler loans? Now see here. As per your book, the answer will be. Now let me see in the comment section. As per your book, the answer will be. It will be this D, NBFCs. Okay. So the answer is NBFCs. Now the problem over here is this answer is NBFCs over here. But nowadays, earlier the case was two-wheelers were very cheap. Means max to max two-wheeler was up to 50,000 earlier, some few years back. So at that time, what used to happen? Banks didn't enter this market. They didn't enter the market because 50,000 you have to take all that all that the financial documents, all the same documentation was same. 3 years financial documents, then all do the verification, everything was there. So that's why bank didn't enter into this arena. But now what has happened? The cost of these vehicles, two-wheelers, have gone around 1 lakh or more. 1 lakh minimum nowadays the cost of two-wheeler is around 1 lakh. Okay, so the cost is huge, and also now the second part is the loan giving procedure has very much fastened, very much speeded up. Nowadays, these up to 1 lakh loans are given basically on your CIBIL and your credit scoring model. So no much documentation is needed in this. So that's why even though as per your book, in exam if it comes you write the answer NBFCs. But practically I'll tell you, these private banks have also entered this segment. Because this loan giving loan distribution of loan is simpler nowadays up to 1 lakh. That's why even the private banks have entered this space. Got it? Next one. The pricing of auto loans and vehicle loans is decided by banks as a collective approach on the basis of which of the following. So this auto loans and vehicle loans, it is decided by the bank on the basis of what? Means what are the parameters? Here we are talking of parameters. So what are the parameters on which we decide what rate should I apply to the vehicle loan, or what rate should I apply to this two-wheeler loan, whatever. Manufacturer's price, dealer's margin, volume of sales, and it can be all of the above. So what are the options? A to C all, A and B only, B and C only, and C only. So what can be the answer for this? It will be, yes, it is correct. A to C all of them, right? Manufacturer's price, dealer's margin, and volume of this is very important factor, volume of sales. We can't have the same rate to any dealer who's selling almost 200 vehicles per month, and the same criteria for a dealer selling only 20 vehicles per month. You can't have it. There needs to be done a categorization. So volume of sales is of utmost importance. Everything else will be adjusted. Sure, if volume of sales is higher, okay, then you can adjust the dealer margin accordingly, because that dealer becomes your prime dealer, right? So here you need to focus more. If the volume of sales is less in any case of dealer, then you can neglect a bit, right? Because after all it's sales, right? After all it's money. So that's why volume of sales plays an important factor over here. In case of vehicle loans given by the banks, they expect that in case of employed people, the take-home pay is not less than dash of their gross salary. So take-home pay should not be less than what? Let me make this 80%, because 60 and 50 are very near. So in case of salaried persons, the take-home salary should not be less than 80%, 50%, 40%, 30%. What does the thumb rule say in banking? What does the thumb rule say in banking? So it should not be less than 50%. Okay, 50%. But remember, for this there are certain criteria. I'll give you two examples. If somebody's salary is, let's say, 1 lakh, okay, then you can say that 50% of the take-home salary. So 50% means around it comes to 50,000. Now this person can manage in 50,000. Can manage, here, can manage. Okay. Now I'll give you a second example. Somebody's salary is, let's say, 15,000. Now if you can do this 50% rule, so it will be 7,500. Can anybody manage in means well-to-go family? Yeah? I'm talking of well-to-go family. I'm not talking of very poor families. So can a well-to-go family manage in 7,500? You have various expenses for the month now. Okay. So can you manage this? No, cannot be managed. So that's why the criteria needs to be cautiously applied to the salaries. Okay. You can't have a blanket rule. Somebody tomorrow comes and says, I earn around 500 rupees per month or 400 rupees per month. Now you apply this 50% rule, nothing will happen. That person will be definitely NPA. Okay. So apply this rule with caution. Apply it looking at the how much the take home salary after deduction. Okay. In case of used cars, the banks generally do not allow loan for purchase of cars older than dash years, 3 years, 4 years, 5 years, 7 years. Give me the answer. Think over it. The banks generally do not allow the loans older than dash years. Yes. What is the maximum duration, maximum life of that vehicle, car, which we allow? It is 7 years. Many of us think it is 3 years. Okay, but it is not the answer. Why do we think 3 years? Because the depreciation rule says that the car is to be depreciated in 3 years. Right? That's why we say it might be 3 years, but it's not 3 years, it's 7 years. Okay, got it? In case of new cars, banks generally allow loan up to dash percent of the invoice price of the car. 90%, 85%, 80%, 75%. New cars. We are talking of new cars over here. How many of you have given two-wheeler loans? Type yes in the comment section. Or four-wheeler loans. Forget it. Two-wheeler. As we are talking here of four-wheeler car. How many of you have given four-wheeler loans? How many of you have worked in this car loan segment? Yeah. Yes, yes. Let me see. Many of us have not worked in this car loan segment, right? So that's why I'm telling you, see this. Whenever we give a new car loan, we give loan up to 90%. New car 90%. Okay. Old car depends on that condition of that car. Okay. We have a question on this old car. In case of used cars, banks generally allow loan up to dash of the car. See here, there are two dashes over here. Or you can write it or here, or. So two dashes over here. 90% or invoice price of the car. 75% or invoice price of the car. 75% or market value of the car. 90% or market value of the car. So what is the answer? First, everyone tell me logically. Think logically. Okay, answer me. See the questions which I am asking, answer this. Will you ever give a loan on any used car up to 90%? 90% of that car value. Will you ever give this? How many of you say yes for a used car? Used car, can you give 90%? Think over it. Will you ever give this? Definitely not, right? So the answer A and D is out, right? A and D is out. Now what remains? B and C. 75% of the invoice price of the car or 75% of the market value of the car. Now the difference now is only between invoice and market. So what will you give in the used car? See here, I'll tell you one thing. In used car, there are a lot of chances of frauds. Okay, frauds can be used in used cars. That's why generally banks don't enter in this used car market at all. Generally. But then also if you want to give, if you have to give, there's some special customer, you have to give it. In that case, you should never give on that invoice price. You should always give on the market price. Market price means the valuer will go and value that car. Valuer, remember, valuer Valuer will value that car and give the valuation. After this valuation received, then only you can give 75%, that also maximum. Generally, banks don't give above 60%. Generally, I'll tell you, 60% is huge. But if there's a special customer, then you can give up to 75% of the market value. Never pay the invoice beyond the invoice price. Why invoice price never pay? There's a chance of fraud in this. Because let's say, see here, me and you are doing the business, okay? I am having a used car, I am selling it to you. Now you want a loan from the bank. So what we decide, see here, the car is for used car, total amount is for, let's say, 6 lakhs. Total amount, used car, complete. So what will I tell you? I'll make an invoice of, let's say, 16 lakhs to you. Now the bank is going to finance how much? 75%. So what will you do? You get 12 lakhs in this. How much do I want? I want 6 lakhs. So we both will collide with each other and team up with each other. And what will you do? I'll tell you that, okay, you get 6 lakhs, your loan. That 6 lakhs which I'll be getting. Afterwards, the remaining 6 lakhs, because we have defrauded the bank. So this remaining 6 lakhs, I'll pass it on to you. So that's why this invoice price is always a problem in case of used cars. So we should always give a loan on market value of that car. Valuer should do the valuation. Any used segment, commodity, anything. Let it be car, let it be two-wheeler, let it be home loan. Even home loan, valuation needs to be done of this home loan. Only then give that loan for used things, because there are huge chances, lot of chances of bank getting defrauded in this used car, used home loan, used two-wheeler, every used segment. Okay. In case of new cars, banks generally insist on a margin of -% on invoice price of the car. So here, now we are talking of again new cars. So margin is what? Just now we saw something, right? 50, 10, 15 and 25. Just now we saw it now. It is 10%, right? So 10% margin, and see here, this car is let's say rupees 200. I am giving you a simple example. Huh? So margin 10%. Margin 10%, right? So 10% is 20 rupees. And bank finance will be giving you what? 180. So this is the way the finance. And how is this margin and everything given? See here, both of them are combined. These both are combined, and they are never given to this customer. They are given to the dealer directly. They are given to the dealer. Remember this. They are never given to the customer. You never give this to the customer, because it's ultimately the dealer who has to get the funds. Okay, not the customer. Got it? Home loan also. Whenever you give the home loan money is never given to the customer. Should not be given, because there are huge chances of fraud if you give it to the customer. So it should not be given to this customer. It should be given to that builder, developer. Similarly, in cars or two-wheeler also, all new I am talking of, it should never be given to the customer. Even used, suppose if you are giving the used car, or used car only, used house, second-hand house. So in that case also, you should not give the money to the customer. You should give it to that third party who is selling it. Okay. So the margin is 10% over here. Always remember. Okay. For new cars, the margin is 10%. Got it, everyone? Now before going, kindly everyone join this AIM batch. And see here, and also the Mahapack 2.0. Now what all do you get in this? See this. In AIM batch, what do you get? You get ebooks, test series, you get all the online classes, you get revision, recorded videos. In Mahapack, what do you get? You get multiple batches per subject. Multiple batches means for PPB you will be getting multiple batches, around 7 to 8 batches. For AFM you will be getting 7 to 8 batches. So many, all the subjects. RBWM 7 to 8 batches. So, and right now discounts are going on. I'll show you how to join them. See here, go to Adda 24/7. I'll always suggest you to go through the app. Always remember, okay? In the app you get 10% extra using the coin systems, okay? So always go through the app. Let me show you. See this. It's very easy. Navigation is also very easy in the app. App has been designed so in a so lucid manner, I'll call it. So easy manner that it's very easy to navigate through the app. So go to Adda 24/7. See this. Gone. Here click on JAIIB and CAIIB. See this. JAIIB and CAIIB. Click on JAIIB May 24. See this. You'll be seeing this AIM batch. Okay. Click on this AIM batch. Now you are seeing this discount offers. See this. You're getting, what are you getting? Ebooks, test series, online classes, expert faculties, interactive classes, recorded videos. You can go through the product details over your highlights. See, all the highlights are given. Okay, 400 plus hours of interactive live classes, 270 test series, and all this you can go on reading. Okay, so look at the discounts also. Click on buy now. Now put the code Y432. Remember Y432. Y432. Remember this code Y432. Click on apply. Look at this. You are getting 77% off. 77, huge, isn't it? So go for it immediately. Also, you can join the Mahapack. In Mahapack, as I told you, you get multiple batches. Look at this. So the JAIIB Mahapack 2.0. Click on this. Now look at this. Again the same, e-videos, test series, online classes, regular videos, experienced faculties, everything you are getting. Now look, now click on buy now. Again put the code Y432. Y432. Apply. See this, 77% off. Huge.